Good morning, everybody, and welcome to this week's weekly analysis session for Monday, 23rd of November 2015. It's certainly been a interesting week on the markets. It's taken a long time for price action to get back to what we were used to, that perfect price action, filter that we use. And certainly in the US, quite a number of stocks this week ticking the box in terms of the price action filter, along with relative strength, three trends, etc. So we'll be going through those today as well. So let's get on with it. The disclaimer first and foremost: obviously the content of today's presentation or any other Elite Traders Club material does not constitute a recommendation, nor does it take into account your investment objectives, financial situation, nor particular needs. So before making an investing decision based on the general advice presented in any of our presentations, please consider whether the advice is appropriate in light of your financial circumstances. All right, let's have a bit of a look at the agenda for today. Obviously the portfolio management, we're going to go through that, see if there's been any changes to the market risk at this point in time. Have a look at a few benchmark indices, specific setups. Also go through and have a look at some trailed stops in particular, and if there were any stop outs or price volume volatility signals as well. Obviously some Q&A, so I'll be looking forward to some feedback for any particular setups that you may have found that may have slipped through my fingers, depending on the universe that you're scanning at this point in time. A quick recap on our market risk at the moment. In Australia, we are still in very high market risk, and as such we need to apply a 20% market risk multiplier. You should all know what that means by now, but obviously if you don't, then give us a call and we'll talk you through that. Market risk in the US is still on moderate market risk after that very strong rebound from all the volatility we had through August and September. So in the Australian market, if you're splitting your capital between the two markets, between the US and the Australian market, and you were allowing yourself a 15% maximum allowable drawdown in a low-risk market, splitting your capital, therefore 7.5% of that 15 you would allocate to the Australian market, and because we are in very high market risk, we're only allowed to allocate 20% of that figure to the market as value at risk. So that would have us at 1.5% value at risk in the Australian market, or 1.5% value at risk on your combined portfolio that you're allocating to the ASX. Conversely, in the US, the other 7.5% that you're allocating, you're allowed to use 80% of that figure, which means you're allowed to use 6% of your overall value at risk and have that exposed to the US market at the time being. Obviously, if you've been in the market for a while now, I'll put it this way: if you are brand new to the markets, then these are exactly the levels of exposure that you should be having in your portfolios if you're entering the markets for the first time. Those of you who've been in the markets for a considerable period of time would already have existing open trades. So rather than necessarily tightening the stops up on those particular trades, just continue to manage them in the regular way, that is the use of your trailing stops. Any volatility, etc. along the way, wider stops should help with that. Occasionally you will get extreme volatile events, and August, at the end of August, was a specific example of that, with the Dow coming off 1,000 points over during one particular session. Extreme volatility, and that's always going to make those sorts of those jobs quite difficult, but again, that's just part and parcel of being in the market. So keep that in context as well when you're thinking about your longer term performance. All right, just a quick recap. Last week, the macroeconomics session on Friday afternoon. The education session last week was on using technical analysis with fundamentals. So if you're a person who has had an interest in fundamentals, and you have liked to use perhaps some fundamentals and some technicals together, or haven't been too sure how you can use your technicals with fundamentals, then I gave some broad criteria as to how you can go about doing that. And I think that's worthwhile having a bit of a look at for those of you who do like technicals, who do like fundamentals, but also wanting to know how you can use technicals to perhaps time your entry a little bit better. Watch lists, because I've been working up in Sydney this weekend, I haven't had time to complete the watch list yet. In fact, there's quite a number of trade setups in the US this week that I haven't even finished the annotations yet. So a little bit of work for the audience, that's you guys, to do between now and when the market opens tonight in trade consideration over there. All right, so let's go through and have a bit of a look at what's happened on the markets this last week. We'll go through and have a look at our indices, excuse me, first and foremost. The Australian market having a pretty good week last week, and starting to move again back up towards its longer-term moving average. We're still in very high market risk. The volatility again, we're starting to get some large candles down the bottom here. You'll see that the percentage volatility, in contrast to a longer period moving average of the volatility, is just starting to tick up a little bit, and that's evidenced with some fairly big down days a couple of weeks ago, and then last week having some quite big up days as well. So just remember that volatility, it's non-directional. Excuse me. It's non-directional, and so those big moves, either upwards or downwards, are going to be reflected in that volatility as well. So it was a good week for the markets last week. Obviously, the banks had done pretty well, doing a lot of the heavy lifting for the broader indices there. We'll go across and have a look at the US. So there we go. Interestingly, the price action that we're getting in this market now, and again, this calamity that was through the end of August, a massive meltdown over really much a period of a week, and then big volatility upwards and downwards. And the market really didn't know what it was going to do at that particular time, and obviously huge volatility. Volatility has since dropped off quite nicely. And you'll see that the number of candles, the size of candles, etc., by comparison with the Australian market, are a lot smaller, and it's been making its way up quite nicely. Interesting that we did have a bit of a turn down the previous week, and it's come back to this level, which has been acted as resistance in the past a couple of times, is now starting to act as support. Our longer term moving average, which quite often acts as a bit of dynamic support and resistance along the way, looks as though it's starting to hold up that market for the time being. At this stage, our price action not quite strong enough yet to drag that back up into low market risk, so we still sit at moderate market risk for the time being. Let's go across to the Australian market and have a bit of a look at some setups that I managed to find for this particular week. Excuse me. The first one that I managed to find was Bega Cheese Limited. So we might just zoom out and see where this stock has been over its lifetime. So really you can see that back in 2011 the stock went sideways, then it started to get some interest. Those of you who know a little bit about dairy companies and things like that might remember that there was some takeover activity in the dairy sector there. A lot of foreign interest looking to get hands on good quality dairy producers, and that still seems to be the theme at the moment, in particular with some some subplots behind that with the growth in China and the elimination of the one-child policy over there. Listen to me talking like a fundamental analyst, but obviously from a technical point of view, there is some sort of news behind this, in that the stock really went sideways for a good couple of years, and just recently we've seen some very strong movement, and again that's on the back of a partnership with Blackmores and looking to produce I think it is infant formula for the Chinese market. So anyway, in terms of price action, we've just formed now a new medium-term trough. So the question is, where's that trough in relation to the second from last medium-term peak? There's the last, there's the second last, well above that particular level. And interesting that as prices come back, it's come back to these old resistance levels, so these old points of demand through here, now starting, points of supply through here, now starting to act as points of demand. So we've really just got to wait for a break of that last medium-term peak. So our rules are entering on stop 0.5% above the high of that medium-term peak. That medium-term peak there is at 602, 0.5% above that has an on-stop order at 605 with a limit to 608. Protective stop coming in at $5.40. Why is it at $5.40? Well, it's got to be a minimum of 2 ATRs away from our entry, but it also must be 0.5% below that medium-term trough. So that's bigger G's, BGA. That's the first one in Australia. Domino's Pizza. A little bit of news in the this morning. I heard about, I think it was Pizza Hut, who trying to obviously compete with Domino's Pizza, had been shortchanging their drivers, trying to cut costs, I think, in competing with Domino's. This is a stock that, well, I'll just go to show you that, you know, a 3 ATR type of trailing stop on this particular stock has kept you in it for a long period of time. And I can remember when this was $20 thinking, wow, Domino's Pizza, $20. That's unbelievable. And yet the stock has continued to move onwards and upwards in the right sort of direction. And as such, it's now presenting itself as a nice setup. It's now formed a new medium-term trough, which is well above the second from last medium-term peak. We've just got to breach this last medium-term peak here, which is at a high of 48.90. So we need to add 0.5% above that level, and we have an on-stop order at $49.15 with a limit to $49.38. Protective stop coming in at $43.35. Again, that's outside of 2 ATRs, and it is at least 0.5% below that last medium-term trough. Really good relative strength. This has had really good relative strength for a number of years, as evidenced by the histograms there. And this is a sort of stock, the sort of movement that can really carry a portfolio quite a considerable distance. It's Domino's Pizza. I've had breakfast, but I'm still a bit hungry. There we go, Sydney Airport. Again, last week, putting in a high high and a high low, so therefore confirming a short-term uptrend, and at the same time confirming the formation of a new medium-term trough. That trough well clear of a second from last medium-term peak, so exhibiting really strong price action. The market wouldn't allow prices to come back down to these previous levels before bidding it up. Very good relative strength. All we need to do is just zoom out and see where we are, and you'll see that we're at all-time highs. So this was one that was in the portfolio earlier in the year, and we did get stopped out. I think it was through this movement here. They did go ex-dividend, but also at that time experienced a degree of weakness, which stopped us out. But again, no harm in looking for another setup, looking to get back in as the price moves upwards. So our on-stop order on this one is at $6.57 with a limit to $6.60 and a protective stop coming in at $6.03. That's Sydney Airport. That protective stop outside of 2 ATRs and at least 0.5% below that last medium-term trough. The next one, Vocus Communications. This is a stock that really has, when you have a bit of a look at it, it's really spent a considerable amount of time just going sideways. So it's based out for a long period of time after having quite a nice run up. So pausing for the market to reassess it, and obviously during that particular period, in terms of relative strength on the shorter term time frame, doing a little bit of underperforming there, whilst the market over various periods has moved counter or more upwards than sideways. But obviously recently, as our market has drifted down, whilst this continued to hold up and go sideways, it started to therefore on that basis outperform, even though it was going sideways and really sort of not not terribly directional at this point. Since then, it's now moved outside of this this basing zone, if you like, or basing area. It's broken out. It's come back. It's retesting that upper edge, if you like, of that basing zone, and looking to move onwards and upwards. The question is, has it moved too far? Well, this is something that you need to have in broad context and think about, well, where is the stock in relation to previous peaks, long-term peaks, for example. And if we zoom out, you'll see that we're at all-time highs. So you've got to remember, all-time highs are actually a very good sign. It's a very strong sign, particularly when you think about the market at the moment. Why is this at all-time highs when our market has been very indifferent? Why has it all of a sudden gone sideways and now popped out and starting to move up? So if you're looking to trade this, now typically we would want to get in on a break through the last medium-term peak. Certainly nothing the matter with still getting in to this type of setup. You just want to also make sure that you use an on-stop order. And again, your on-stop order rules are saying you need to be at least 0.5%. So we're still wanting that confirmation, that follow through in the next period or two. And so from that point of view, an on-stop order 0.5% above that last dominant candle there will have an on-stop order at $7.23 with a limit to $7.27. Now, in terms of your protective stop, again, you still have to obey your stop-based rules. So you've got to use a measure of volatility. So you've got to be at least 2 ATRs away from your entry point, and you've also got to be hiding behind that last medium-term trough and at least 0.5% below that. Now, if you do that and you structure a setup, you're going to have a stop around about 14.5%. So the stock's got to do a little bit of work to get to that sort of initial one-to-one type target as a bare minimum. But given that we're in blue sky, certainly, the reason why this is so wide, as you'll see down the bottom here as well, is that the volatility of the stock has started to increase as well. So what that really means is that a 14% move, may well be a couple of ATRs. It's as simple as that. Other stocks you'll have 2 ATRs might only be a 6 or 7% type of move. And so it really just relates to the individual stock-specific volatility. So hopefully that makes sense. So that's Vocus Communications, VOC. Next one, HFA. Very close to triggering last week, HFA. So this is just a recap on an existing pending trade. All we need to do is break through this last medium-term trough. Price action is very good. On-stop order still remains at 303 with a limit to 304. We went really close last week. I just popped that in up there. We got up to 302, not quite triggering in, but nevertheless a nice white candle last week and a bit of follow-through this week. I think we'll see that trigger. The protective stop there coming in at $2.67. That's 0.5% below, and again outside of 2 ATRs. CGF. This is one an example of one that, like the one we were talking about just prior to HFA. Again, let's just have a bit of a think about where this stock has been, and if we zoom out, you'll see that we are pretty much at all-time highs, other than way back in the 2000s. So that's when the dinosaurs were roaming the earth, as far as this stock is concerned. Passing the long-term peak, so that's very, very strong price action. Interesting that it just ploughed straight through, but having done that, it has since come back to retest that particular level. So as you would expect, totally normal, and last week putting in a very strong candle. So it did certainly move past that last medium-term peak. So again, the question beckons, can I still get into this particular stock? Well, I see no reason why you wouldn't want to, taking a trade on a stock that's effectively all-time highs, as in relation to the last 7 or 8 years at the very least. And if you're doing so, then you really need to be 0.5% above the high of the last candle there. Now, I haven't got that line there on exactly the right spot. You'll see the annotation there On stop at $9.04 with a limit to $9.09. Your protective stop, again, it must be below that last medium term trough, and it must be also outside of your 2 ATRs. So I'll just put on where currently that's where 3 ATRs is away from the closing price of that particular candle. If I put on a 2 ATR, that's where 2 ATRs is from the closing price of that particular candle, not the high of the candle. That's why the line is a little bit below where I've got that stop located at this point in time. So it just gives you a bit of an idea as to where the stop is being placed, and obviously we're taking volatility into account with that as well. That was pretty much all I could find in the Australian market. So if you've got any that you happen to find in the Australian market, please type them in and we'll have a look. At this stage, what I'd also like to just flag for you, thanks Darren, I'll have a look at that in a moment, is just a change to the timing, I guess, of these webinars. I'm thinking about running an ASX webinar on Friday afternoons. So after the market closes and we have our data for Beyond Charts, I'm looking to run a live webinars at about 4:45 on Friday afternoons, and that way you've got all of this information that you can look at over the course of the weekend, so that come Monday morning you've already done your analysis and you can be ready for when the markets open. And then at the same token, I'm looking to run the American or the US webinar of a Monday afternoon. It's not quite so important that we have everything ready for Monday morning, because obviously the US markets don't open until late on Monday night. So if you could just spare me 20 or 30 seconds and just type in your thoughts on your keyboard just to let me know what your feelings about that would be. So I would run the live webinar Friday afternoon, as I said, at around about 4:45. It will absolutely be recorded as per usual, and then I will run a webinar for the US on Monday afternoon. Okay, Kay says fine, Pete says fine, Bill says fine, both Suit says will, Darren says good idea. Okay, well that's good, because certainly that will save a huge amount of time in putting that material together. I can also have the watch list published at the same time as the webinar is delivered as well, so that should certainly make things easier. Keith says Friday at 5 would be better. Okay, that's cool. Better use of prep time. What? And miss out on Chaser, says Kim. Well, yes, you got to remember they're always recorded anyway, Kim. So I know you've got your preferences. Okay, all right. Well, look, I'll continue to think about that, and obviously send out a broader message to the folks who aren't live who aren't attending at the moment on the webinar, as opposed to who aren't live, and let the broader community know of that, of perhaps of that decision. But I'll certainly confirm that with you shortly in any case. All right, Darren, we had AOG. Thanks, David, there. Thanks, John. And I'll just scroll back up the list here. AOG. All right, so let's go and have a look at AOG. AOG, Veco Group. There we go. All right, let's have a bit of a look. And what I'll do is I'll put on the overlay to start with. Look, certainly, good relative strength, been moving up. Certainly got higher troughs, which is a good sign. It's a positive sign. In terms of price action filter, look, at this point, we're still in short-term downtrend. We would like to see that price is turning around and moving up. And it really looks like it's probably going to do this this next week with a very, very strong candle. So this would typically have been an aggressive type of entry. Certainly a very strong candle last week. And aggressive means that, look, we don't have all trends in alignment at the moment. So we're actually still in short-term downtrend at this point in time, that last candle being an outside candle. So we're still in short-term downtrend. So if we were to trade that, it would be an aggressive entry. In terms of our price action filter, if price is to break above this last medium-term peak, and in doing so, forming a new medium-term trough, where is that trough in relation to the second from last medium-term peak? And it's actually below it, so it wouldn't meet our price action filter. That's all, Darren. But other than that, relative strength's looking pretty good. I did notice that we've got some areas through here as well that you would need to consider. Obviously, a long-term peak there at the moment. It's having that first test at the same time, so it's just already done that. So that's certainly a one of the boxes ticked, that we've had that first test. We just haven't quite got the price action filter that we're really looking for. But despite that, it's got a lot of room. Once it breaks through there, it's got a lot of room to the next upside target. So not all that bad, all things considered, Darren. All right, we might head over to the US now. And Peter says, I do like the Monday morning as now we 3 hours behind. Yes. Okay, Peter, in WA there. Certainly. Certainly wouldn't miss out information. You'd get it actually over the course of the weekend. So knowing Peter, you could sit there and have a glass of wine during the course of the weekend. A bit hard to have a glass of wine during the morning. Anyway, let's go across and have a look at the US at this point in time with the pendings. And you'll have to forgive me, I haven't had time to annotate all of these. Again, as I mentioned, I've been up in Sydney running the Trading Plan Plus workshop, and time got away. All right, the first one that came up at the top of the list is, and I'll just make sure that I am at the top of the list. Yes, I am. Is HCSG. Now, this is one from the previous week, so it's just a recap. And again, last week's candle, look, it was white, meaning it had a higher close than the previous week. It's certainly not a candle to be jumping out of excitement with, but all we have to do at this point in time is wait for the break of that last medium-term peak. The price action, obviously very, very good relative strength. We're at all-time highs. On stop order, 38.68. Limit to 38.87. Protective stop at 34.45. That's Healthcare Services Group. One from last week. The next one, as it goes through, ATO, Atmos Energy Corporation. And again, if we have a little bit of a look at what's happening, very good relative strength. Where are we in terms of price? We're at all-time highs. So again, these stocks that have been moving up, each one of these highs, I look through here, medium-term peaks, has been all-time high. So it continues to move onwards and upwards. And given what the rest of the market's been doing, very positive sign. Last week putting in a higher high and a higher low, short-term uptrend. So therefore, at the same time, confirming the formation of a new medium-term trough. That trough well clear of our second from last medium-term peak. So it ticks the box in terms of that really stringent price action filter. We just need to wait for the break of that medium-term peak. 0.5% above the high of that medium-term peak candle. Sees an on-stop order at $64.07 with a limit to $64.39. Protective stop at $58.92. That's outside of 2 ATRs and at least 0.5% below that last medium-term trough. That's ATO. Next stock, ATR. Let's just zoom out and have a bit of a look at what this stock's been doing. You can see for quite a long period of time, stock really has been going sideways. We can even extend this out a little bit further and have a look at those old areas that were once resistance, acting as points of demand in the future. Old points of resistance, old points of supply are starting now to act as points of demand once we've broken out of that range. Now I'll just make that that rectangular box, the right size there, and broken out of this basing pattern, if you like, resting phase, breaking out, coming back, having a retest. Just needs to move past the last medium term peak there. So price action is very, very good. So all we need to wait for is a break of the last medium term peak. So as such, we have an on-stop order at $76.34 with a limit to $76.71, protective stop at $70.21. You will note through this basing sideways pattern, and look how long it had spent going sideways, nearly 2 years going sideways. It's now broken out of that particular pattern. During that time, obviously, relative strength in all three time frames was sub-performing, if you like, or underperforming the broader market. But recently, it's obviously got a bit of a kick along and is now starting to move up. So that's a good sign for ATR. Next one, AVY. This was in the portfolio in the watch list earlier on in the year. Hello, Phil. Re-change to Fridays. I think US has Thanksgiving holiday Friday, so perhaps both markets could be done Friday afternoon. Yeah, good idea. Thanks for that comment there, Phil. AVY. So where are we? We are at. Oh, there we go. Guess who didn't scroll out far enough over the course of the weekend? Yours truly. So at the moment we have, and I'll pop that on there, we've got a long-term peak there. So certainly in, if I just scroll in a little bit, keep pedaling, David, that mouse wheel, we don't have sufficient room overhead. So that was my mistake. Something you can learn from. Other than that, obviously the major restraint on this, a long-term peak, price action, etc., set up really, really well. Last trough at or above second from last peak. Very good relative strength through there. Unfortunately, in my haste, didn't see that long-term peak. So we will scratch that off and go on to the next one. AWK, let's zoom out and see where we are. All-time highs. And again, really nice upward movement on this stock over a period of quite a number of years. Let's zoom in so we can make some a bit more sense of this. And again, a stock that recently has exhibited very good, very strong price action. So a lot of white candles through here, having a bit of a retracement. Last week, putting in a higher high and a higher low. So again, confirming short-term uptrend. And at the same time, formation of a new medium-term trough. Where's that trough in relation to second from last peak? Again, clearly above it. We just need to wait for a break of our last medium-term peak. So we have an on-stop order, 59.50 with a limit to 59.79. Protective stop coming in outside of two ATRs at 54.85 and 0.5% below the last medium-term trough. That's AWK, American Waterworks Company. Next one, CB, Chubb Corporation. I think these are the guys who do all the carry around the money and have safes, and big guys driving big vans with guns and stuff like that. CB, so what's been happening with this of late? Obviously, I'd say that's something to do with some earnings or something like that through there. Massive big candle. But since then, it's started to produce some price action that we can at least base a trade off. Obviously, we've got some rising troughs through here. 1, 2, 3 rising troughs, so that's always a positive sign. Relative strength has been picking up, outperforming the market. In terms of where it's been, let's zoom out. We're at all-time highs again. So again, it's a positive sign. The market must really like this stock. Last week, put in a higher high and a higher low. So at the same time, confirming that short-term uptrend, also confirming the formation of that medium-term trough. That medium-term trough, where is that in relation to the second from last medium-term peak? Well, there's the last peak, and down here is the second from last one. So it's well clear of that. It's also clear of the previous medium-term peak as well. So very simply, we just need to place an on-stop order 0.5% above this level. So on-stop order comes in at 132.35 with a limit to 133.02 and protective stop at 125.79. That's CB, Chubb Corporation. Another one, CLX. This was in the watch list earlier in the year, and we did get stopped out at one stage. And I'm just trying to think whereabouts it was. I think it may have been on a might have been very early on in the year. I seem to remember this being in the watch list and being taken out through a very tight trailing stop. Certainly the 3 ATR based trailing stop, if you're in it in the earlier parts of the year, you would still be in it, and happy days. That's why I think it's so important to let your profits run. If you cut your losses short, which is generally what most people struggle with early on in their trading, the next obstacle for traders and investors is to let their profits run. So after being very, very good and being very diligent and cutting your losses short and perhaps having a string of losses, the temptation is, as soon as you get some green on the screen, to take it. And that is not a good thing to do, because if you do that, you're going to go broke. Unfortunately, you can't cut your losses short and cut your winners short at the same time. You just will not make money. You need an extremely high strike rate for that. And unfortunately, that's the tale of the story. You've really got to let those profits run. So I'm a huge advocate of just being patient. It is a difficult discipline to keep doing in light of market volatility, but it's the way that trend followers have to behave. It's the way that the turtle traders made all their money, and it's the way that you can make money over the longer term if you continue to do that. So again, it's just a constant reminder you've got to let those profits run. CLX, so last week, higher high, higher low, new trough formed at the same time. Trough clearly above, second from last medium term peak. We just need to wait for the breakout. 0.5% above our last medium term peak. So we have an on-stop order there at 127.88. I haven't put the limit in there. Protective stop at 119.55. All right, that's CLX. Next cab off the rank. All right, this is where you'll see that I don't have any annotations in there. This is where I ran out of time to present them for you, unfortunately. So you will have to go through and do your own sums, etc. They will be in the watch list, and of course I'll have all the sums, etc. on there that you can have a look at. This is an example of one of those stocks where prices moved past that last medium-term peak. So you just need to be aware of that. The stock is at all-time highs. Really beautiful trend. Obviously, again, a lot of market volatility at the end of August throughout, but since then has moved up. We're starting to get the really nice price action again. Nice move up, shallow retracement, moving on again. It looks really strong, really good relative strength. So if you want to trade this one, you just need to place an order 0.5% above that last very strong candle. Your protective stop, your trailing stop, it needs to be below the last medium-term trough, 0.5% below and outside of the 2 ATRs. So that's Costco. And again, apologies for not having time to annotate. DHR, I think this was also in the portfolio earlier in the year. And again, you'll see that the trailing stop has kept you in it. And again, looking like it's ready to move up higher once again. So that's DHR. It has passed that last medium-term peak, so you just need to be thinking about that. But given that we are at all-time highs, a protective stop needs to come in underneath that last medium-term trough. That last medium-term trough, remember, well clear of the second from last medium-term peak. It's also clear of this fairly dominant medium-term peak as well. That old point of supply now acting as a point of demand, looking very strong. Last week's candle looking very strong as well. That's DHR, one for consideration. DPS, I'll just put on the ETC overlay and put on my swing chart. And let's just zoom out again. All-time highs. Spent a long time moving upwards, this particular stock. I know some of you have been in this previously and have asked about, well, what do I do when it goes sideways? Well, that's something that you've got to consider. If it's not touching your trailing 3 ATR, I would absolutely just be inclined to let it go and see what happens. And continuing, again, remembering that this is a longer term strategy. And again, continuing to be true to your rules and staying in until price closes below your trailing 3 ATR. It hasn't closed below anywhere along here. So again, you might have got into this stock based on price action. Any number of places before. As an example, through here, nice little trough coming up back in around about April of last year at around $50. Well, the stock's getting close to $90. That's a pretty good return, even though you had to sit through a bit of sideways movement. So just something to think about there as well. Dr. Pepper Snapple Group, again, last week putting in a higher high and a higher low, confirming the formation of medium-term trough, well clear of that second from last medium-term peak as well. So again, just needing to think about where you're going to place your on-stop orders, and I think you all know how to go about that. Other ones, EFX. This is one that's already in the portfolio, triggered way back on the 28th of May. Certainly not without its volatility along the way, but at the same time has extended up really nicely recently. It's come back, and old areas, old points of supply now acting as future points of demand. And at the same time, if you're looking to get in, that last candle has broken that last medium-term peak. So you need to consider that, entering 0.5% above the high of that very strong candle. Particularly stop underneath that last medium-term trough and outside of your 2 ATRs is what you need to do. But as it's already in the watch list as well, you'll see that last week's candle has also dragged up the trailing 3 ATR on that one as well. That's EFX. GT, Goodyear Tyre and Rubber. There we go. I'll have to have a look at that. That one, to me, looks as though we've got some ceiling overhead there, and I reckon that's probably a bit too close. So again, in my haste to get everything done, neglected to have a look at that. So I will take that off the list. There's certainly not enough room between where we are at the moment and that ceiling overhead, so that will come off the list. So a lesson there. HRL, interesting. Again, this is a bit of an analysis that I did on Beyond Charts much earlier in the year. And again, looking at trades that were exited at round numbers. So this was a stock that was exited, and you'll see there that it was exited at 50.97. Not too sure why it was exited at 50.97, but anyway, it was. That was in the watch list. That's a historical one, and you'll see the trailing 3 ATR and price at the moment is getting close, nudging $70. So there's a huge amount that's been left on the table, so to speak, with this particular stock, and it needn't have been exiting at 50.97. I'm not too sure whether that was because of round numbers or what. But certainly it continued to move up very, very strongly and is setting up again. So what I'll do now is I'll just put on the overlay so you can see all of that. Good relative strength. Price action very good. Just forming a new higher medium-term trough, well clear of the second from last medium-term peak. Really strong price action. All we need to do is wait for it to clear that last medium-term peak. So again, 0.5% above that level. Make sure your stops are hiding below the last medium-term trough and outside of 2 ATRs. The next one, IDTI. There you go, IDTI. Where are we in terms of historical elements? Well, if we scroll out, you'll see that there's a level there that we're passing through now. The next major level above that, you'll see is, we're getting up towards that level there, up towards $40. So there's plenty of room for this stock to move. And that's really ancient history in terms of where this stock is at the moment. In terms of price action, looking really good. Again, this is all the end of August area. So since then, moving up very, very strongly. Nice shallow retracement. It has already passed its last medium-term peak, so you need to consider that as well in terms of the structure of the trade. Your on-stop order below the last medium-term trough, outside of your 2 ATRs, and obviously your on-stop order 0.5% above the high of that last candle. But that's looking very, very strong. Interestingly, that this level through here, this is a longer term peak, medium term uptrend on the left hand side, medium term downtrend on the right hand side. We just zoomed through it, we've come back, we've retested it, it's looking really strong. Now IDTI. It's almost like a AC/DC song, isn't it? KMB, Kimberly-Clark. Let's just zoom out and see where we are. Okay. All-time highs, looking really good. Again, this is a stock that has gone sideways for a considerable period of time. It's pretty evident through there that eventually, after moving sideways, the prices now come out of this sideways zone, moving, if you like, retesting the upper boundaries of that, looking strong. We just need to break through this last medium-term peak there. Relative strength's been pretty reasonable. Price action's very good. We've got a series of consecutive higher troughs, which is always a positive sign. Points of demand moving higher, really positive. Last trough well clear of the second from last medium-term peak, and certainly this old point of supply and this old point of supply now starting to look like they're acting as points of demand as well. That's KMB. We're only up to the L's at this particular point in time. There was a setup here a couple of weeks ago where price again had moved past the last medium-term peak, so we had an on-stop order 0.5% above that particular level. Since then, it's continued to move upwards really strongly. It's come back, it's retesting these breakout levels, which is all pretty normal. And last week putting in a nice candle, confirming formation of a new medium-term trough. That trough's well clear of that breakout level as well, so really strong price action. Really good relative strength, increasing relative strength as well. Looking very good. We just need to place an on-stop order above the high of that medium-term peak. So that's one that you can go through in between now and seeing the watch this later on. Lennox International, this is one that we've been in for a while at $100.98. It's certainly taken a while. This is back in February. So the stock's gone from $100 and it's now up at $136. So that's a 36% return for that particular stock. I think most of you would be pretty happy with a 36% return, particularly those of you who are trading in the Australian market where the top 20 stocks that a lot of people are in are down around about, on average, around about 10 to 12% this calendar year. So we're still in this one. It has set up again. Last week's candle, obviously a higher high and a higher low, confirming short-term uptrend. At the same time, new medium-term trough form, well clear of the second from last medium-term peak, so really strong price action along the way. At the same time, it's also, you'll notice it's dragging that trailing stop up as well. That's Lennox International. So hopefully if you've been in that stock, you are still in it and that you haven't chickened out and taken profits early. It's not a good thing to do, folks. It's something that you've got to work hard at. MAS Corporation here. Again, same sort of thing as last week. Really strong candle, short-term uptrend, trough, well clear of second from last medium-term peak. Good relative strength. That candle there has surpassed the last medium-term peak, so you just need to bear that in mind in terms of your on-stop order placement. Your protective stop, obviously, underneath your last medium-term trough, outside of your 2 ATRs, so you need to go through and measure all of that. But other than that, looking very good. Next stock, MKL, Markle Group, all-time highs, looking very strong at the same time. And again, interesting, over a period of time that breakout opportunities back in April of last year, but around about $600 stock at that point in time, moving up, continuing to follow an ATR, eventually closing below that at around about $800 odd. A nice return on that. Setting up again. This peak here, it's not a long-term peak. It's only a medium-term peak. We don't have a medium-term downtrend on the right-hand side. As such, we don't need to wait for first or second tests, etc. This last candle has certainly passed the last medium-term peak. So again, at all-time highs, need to place an on-stop order 0.5% above that level. That last trough, well clear of the second from last medium-term peak. Hide your protective stop underneath that medium-term trough and make sure that you're at least 2 ATRs away and you've got a well-structured trade set up. Kim says, check Masco on-stop order needs to be above long-term peak in 2007. Okay, well, we'll go and have a look at that one. Was that the previous one? Masco. Okay, let's zoom out and have a look. Maybe I've... Oh, yes, well done. You can see that the work over the weekend obviously got to me. Let's just check that one. Go back in time. Okay, so that's 2005. Let's check that one there. That's at 30.52. And what have we got over there? 30.52. Yeah, so 30.52 is your long-term peak. So that's really actually coming up to that's really our first test at the moment. So scratch that one off the list, folks. MAS. Thanks very much for that, Kim. That is just coming up to a first test of a long-term peak. So again, apologies for that. Obviously, the Trading Plan Plus workshop over the weekend and the travel made me a little bit neglectful on that very important element. So well done for picking that up. MKL was one that we had a look at. Munro, let's zoom out and make sure. Absolutely, all-time highs. There's been a couple of automotive type of stocks that have come up in the scan this last week, which is interesting as well. Good relative strength. Last week, certainly would have been nicer to see perhaps a little bit more bullish candle than that one. But at the same time, if we're thinking about old major points of supply, now starting, once they've been broken, now starting to act as points of demand along the way. We'd like to see a more bullish candle this next week. But again, all we have to do is wait for a break of our medium-term peak. We are in blue sky territory. Protective stop needs to come in below that medium-term trough and obviously outside of your 2 ATRs as well. That's Munro, Muffler and Brakes. NOC, let's have a quick look. Blue sky again. It's been blue sky all through here for a long period of time. So again, whilst it's been blue sky, it's certainly had a terrific run over the last couple of years, and it hasn't, all through the market volatility, it hasn't once closed below our trailing 3 ATR. So again, this is a sort of stock you only need one of these in your portfolio will make a significant difference. If you've got 2 of these in your portfolio over the time, then it's going to make a massive difference to your overall performance. Last candle, nice strong candle there, forming a new medium-term trough. That medium-term trough well clear of second from last medium-term peak. And again, these old points of supply through here are starting to act as points of demand. Good relative strength. Again, all we need to do is have an on-stop order above that last medium-term peak. Yes, it is getting close to $200, but it was close to 180, it was close to 150, it was close to 100, and it's kept plodding away. So certainly a nicely structured trade on that one as well. That's NOC OA. This was an example from earlier in the year where we did have a setup through here. It was cancelled because we had the formation of a lower peak through here, so that came out of the watch list at that time. Obviously, since then, volatility through August along the way It's now setting up again once more. The last trough is at or above second from last medium-term peak. Interestingly, that since this particular time, the 3 ATR in terms of its price action, even through movement along the way, has still managed to support a stock that if you happen to be in it for whatever reason, keeping your stops, wider stops are much better than tight stops. Just something for you to keep in mind and keep practicing. At this point in time, we just need to get past that last medium-term peak. Let's just zoom out. Again, you'll see that we're at all-time highs. How did it get there? Those of you who've been following ETC for a while, have been in the markets and trading for a period of time, you'll be saying, this will be second nature to you. How did it get here? It's obviously very, very strong. The market likes it. If the market likes it, that's all you need to know. At this point in time, we just need a non-stop. On-stop order, past that last medium-term peak. You might remember at the beginning of the year, we would have had exit orders at $100. Certainly, I'm going to get rid of that. Not worried about round numbers. PSA, nice candle last week. It has just marginally passed the last medium-term peak. At the same time, forming a new medium-term trough, well clear of the second from last medium-term peak. Let's just zoom out. All-time highs. It's been at all-time highs for a couple of years now. Continues to move up very, very nicely. Obviously, if you had been in this a little bit earlier, again, there's periods where you would have made some money and given back a little bit of your profits along the way. Certainly not every trade you get in is going to be a runner, but you only get runners by creating the environment that allows them to evolve. Some people say, how do I pick those stocks, David? Well, you don't. You create the environment and they evolve over time. And you look back and think, wow, where did that come from? Very good. RAI, Reynolds American, last week, short-term uptrend being confirmed. Two smaller white candles. Would be nice to see a little bit bigger one than that. But at this stage, it does meet our price action filter. Last trough, at or above second from last medium-term peak. We just need to get a break above that sort of $50 level there at the moment, where that medium-term peak is. All-time highs, looking very good. Let's move on to the next one. We're getting there, folks. RHT. At this particular point in time, let's just zoom out. Ancient history all the way back in the .com era there, back in the 2000s. Certainly this is a stock that has gone gone sideways for a fair amount of time. It has moved up and sort of stagnated a little bit. Certainly does look like it's ready to start moving again. This sort of area through here hasn't done a whole lot of late, but just starting to get towards that upper level now. So that's a long-term peak. At that point there, we've got a medium-term uptrend on the left-hand side, a medium-term downtrend on the right-hand side. So a long-term peak. We've had our first test. We've come back. We're just looking for the breakout now. So with this sideways movement, the relative strength increasing. If we can break out of this level, then certainly it opens up the door to the $100 mark at the very least, given that we're in blue sky. That's RHT. ROP, that one you'll see, last candle very strong. So it's already passing that last medium-term peak. Let's have a look at where we are. We're at blue sky. Very good relative strength of late. Increasing as we speak. So if you're going to enter that one, you just need to place a non-stop order 0.5% above that last candle. Hide your protective stop below that last medium-term trough and outside of 2 ATRs. That's ROP. SIRO Dental, at this point in time, good price action. All we need to do is place a on-stop order above that last medium-term peak. Let's just zoom out and see where we are again. It's been at all-time highs for a considerable amount of time and continues to move in an upwards direction. So that's SIRO. Nice candle last week as well. getting closer to the end. SIRO is actually already in the watch list. I'll just remove that 3 ATR there for the time being. I'm not too sure why that should be in there, folks. Absolutely, you can. Let's just have a look at that, because that's a long-term peak. I don't reckon we're going to get enough out of this into that particular level. I certainly like to see, 2 to 1. If we can get 2 to 1 into a long-term peak, that one there, you're not quite going to get there. It's pretty close, but again, given that we've got the long-term peak there, I'm going to scratch that from the watch list for the time being. Let's wait until we clear that. That was the last one. So suggestions, folks. We've gone over an hour. I didn't intend to go that long, but certainly if you've got some there, we'll have a look. Okay, Kim said, for those using IG scan list, HELE is still set up for this next week. So let's go and have a look at that. I think that was Helen of Troy, was it? HELE, Helen of Troy. Let's have a look. Okay, so let's put on our overlay. Let's zoom in a little bit. The watch list, just by the way, folks, that I scan is just the Saxo watch list. There is an IG watch list in there as well. So this stock is at all-time highs, so fantastic. Very good relative strength. Certainly there's a long-term peak through there that... oh, come on, be on charts. Draw a line for me. That we've already come up to. So we've already had our first test. We've had the nice little retracement there. So in terms of price action, last trough, let's just zoom in a little bit. Last trough, clear of the second from last medium-term peak. So it meets all our price action filter rules. So that's ticking all the boxes. All we need to do is place a non-stop order 0.5% above that particular medium-term peak there, and we are good to go. So that's certainly a valid setup there. If you're looking for another one to put into your portfolio, obviously you protect your stop below your last medium-term trough and make sure that you are at least 2 ATRs away. Wow, what a long session. Good pick up, Kim. Certainly a good setup there on that particular stock. Right, folks, I will let you go. I'll go and get this recording rendered and posted as soon as possible, and the watch list I'll also get out as well. Keep an eye out for a communication during the course of the week. I will invite feedback. I'll just send out a note saying, look, these are my intentions. So certainly you've given me some feedback today, which is fantastic. It would be great if you do happen to get the email. If you can just type in a couple of words just saying, look, I'm happy for that, David, or whatever. Feedback either way. That would be very much appreciated as well. Having said that, that's the end of it for today, folks. Good luck in the meantime, and we will catch up with you later on in the week. Thanks, folks. Bye.